Yo, what's happening? Have you got your popcorn ready? Have you got your beer ready? Have you got your coffee ready? Whatever it may be, are you ready for the popcorn effect? Are you ready for the markets to go absolutely insane? We have the FOMC. We have the numbers coming out in about 12 minutes from now. And then I think we have Powell speaking in around about 40 minutes. We'll see if we're going to stream throughout Powell's speech. But for now, what I think is very important is for me to be going through the charts and prepping us for what this next big move can happen. Is this a pre-dump that's happening right now? Are we getting a little bit of a pre-dump into a pump? Because I was looking over here and I was looking at the S&P. And again, we are at such a critical level at the moment, especially having the S&P pull back quite a bit over the last, few weeks or few days. We're now sitting at a major resistance. Things go well today and things all of a sudden go crazy. How crazy will they get? Are we going to get a 0 basis points? Are we going to get a pivot? What exactly is going to happen? Or are we going to get a 50 basis points? 25 basis points, I think, is pretty much set at the moment. I think the market sort of priced that in, if I must be honest. And I think Bitcoin remains strong if that does happen. But if there is any other surprises, we will soon see what will happen. So we have the S&P sitting at a critical level. We have Bitcoin sitting at a critical level. It just touched past the high. It is ready. It is sitting there. It is fueled up. It wants to absolutely explode. This is a late stream, guys, not a usual stream that I'll be doing. So smash that like button, smash the subscribe button. Paolo, no more wasting time. Play my song. Let's get pumped up and let's get ready for the popcorn effect. Let's hit it. Let's do it.
Click, click. Have you heard the news? What? With his finger on the pulse, it's like Sheldon knew. Click, click. When the sniper shoots, we got Sheldon on the charts, so we never lose. Enter the sniper, sharpshooter advisor. Enter the sniper, he marks the charts right. Enter the sniper, he's calling the cycles. So enter the sniper, click, click, click. Time to be dedicated, sniper mode is activated. Explosions in the market are in target and Sheldon demonstrates. Mirror, mirror on the wall, Master Sheldon tell us all. We got Sheldon on the chart, so we never lose. Enter the sniper, sharpshooter advisor. Enter the sniper, he marks the charts right. Enter the sniper, he's calling the cycles. Enter the sniper, click, click. Enter the sniper.
Hello, Banter fam. Hope you're having a great day. It's nice to see you 2 times in one day. Guys, if you did miss the show earlier, please go catch up on it. I did speak about pairing trading. And I saw a lot of people liked it. We ended up having a huge response from it. So please go have a look at the power of not looking at the dollar. Remember, guys, what we do have is we have Sniper School. Sniper School, very important. If you have a look just below the video, you'll find joining Crypto Banter, the Sniper School, this link over here. Once you register for it, you're going to put in your email. They're going to send you an email. They're going to give you the 3 basic steps to join Sniper School. You have to sign up with one of the exchange links. You have to deposit $100 that you get to trade with, and you have to put in your user ID. It's all there, very simple. And come join me. Go watch my show earlier. Let me know if you want to get educated from Sniper. I think we have something absolutely amazing, and we have all the different exchanges here you can sign up on. But let's jump in. We have a big show, big show. I see we got Rania. He's busy multitasking. So firstly, he's a little bit sick, slightly sick at the moment, but we also have him doing a spaces. He's busy doing a spaces at the moment as well. And I think that's going to be great, guys, when we're done here in the next 40 minutes or so, to go jump on there with Run and to go see what other people are thinking about what has just happened. Let me show you. Watch him.
So
he's on his spaces. He's busy multitasking, trying to be here within the show because we want to see what he's thinking. He spoke about something which I'm still trying to get my head around. Now, I'm a chartist, right? I like to do charts, and it's amazing because it removes the emotion, removes everything. But what he's trying to say is the basis points. He's pretty much saying a 25 basis points is a definite. Now, I think it's an 80% chance that's happening. But he said it's the dots, where all the guys get to do a dot of what happens next. He said that's going to be the critical point about where do they go after this. So I'm very intrigued of what he has to say. For now, let's jump into the charts and let's have a look at what we currently have. So not much movement on the market just yet. I think in the next 8 minutes, we're about to go wild. And I think obviously when Powell starts speaking, we're going to have crazy. I think the next hour is going to be absolutely insane. But looking at the moment, we still basically have Bitcoin trailing up quite slowly, looking strong, looking aggressive. And I think what we're trying to ask ourselves is what will come out of its way, or what will happen to stop the momentum, and what could be the absolutely insane explosion point. All I know is if we get a 0 basis points or something crazy tonight, I won't be surprised to see a $33,000 or $35,000 Bitcoin extremely fast. I really won't, because if you have a look earlier, we even started to get a little bit of a pre-dump, you know, within the S&P and within the futures. And Bitcoin just holding strong. We even broke a higher high yet again. So at the moment, we had Bitcoin hitting 28,800. I do apologize. I usually have this screen over here. This one's giving me a few issues tonight, so I'm looking this way. But ultimately, we do have this looking strong. Now, the big question we're trying to ask ourselves is, right now, we're allowing Big Daddy to run, right? We're allowing Big Daddy to do what it needs to do, and to ultimately get to the major level. But we want to know distribution. You know, when is distribution going to go into the altcoins? When are we going to have an altcoin wake up? I spoke about it earlier, where I spoke about Chainlink. I think Chainlink is a huge one that's breaking to Bitcoin at the moment. We have XRP and we have Cardano. So what we are starting to get is the slight popcorn effect, where the altcoins are starting to get a little bit of life, which for me starts to give an indication that we're getting near that point. Now, the only thing that we're waiting for is basically a sort of event to switch that dominance. And the way I can basically paint it out is very much like this. If things don't go good tonight, and we do end up getting a little bit of a dump, right? And we start a bit of a pullback. I expect the stock market to pull back pretty hard. And I do expect, yes, crypto to be following. But ultimately, I think that would give us the activation of the altcoins. And what I would basically see happening if that did have to happen, that's why I'm putting this, and I decided to chart it all live for you guys, is we have this beautiful upwards trend happening over here, right? A momentum trend. You say that, you know, Bitcoin's been running in this momentum for a while. It's not running in the strong momentum that it was. It's definitely starting to slow down. And that's why we're starting to zoom in and track to see where exactly it's at. But ultimately, if that starts to break within this meeting and within the next hour or so, I am expecting a shakeout event. And what that basically means is there are many people long Bitcoin right now, and there's so much things happening. I wouldn't be surprised for a slight wick at any single point. Now, it's very hard to say that just yet without breaking this line, because Bitcoin is just so strong at this point. But if we do decide to break this line, I won't be surprised to see a wick that comes down to the $26,000 level, maybe even the 25. Okay, but what I do think happens in that time, if that scenario plays out, is I do think we have a dominance break to the downside. I think we finally reverse the dominance. And what that little wick or that little dump, which I do expect coming at any point, guys, the only way that I can see the altcoins coming to life is a dump event, is a quick dump event. I'm not talking about something that takes long, like a fast shakeout that basically reactivates the altcoins. And the reason being is I'm not sure the full understanding of why it does it, but whenever dominance is moving really strong in one direction and moving with Bitcoin, you always need either an insane pump or an insane quick dump just to trigger the altcoins. And we've seen it many times, and it's crazy. We had a dump off yesterday of altcoins, and all of a sudden it triggered Chainlink, Cardano, XRP. Like something to do with these crazy shifts like this, they activate different tokens. And for me, that's what is needed at some point to get the altcoins moving. Now, remember, the dominance has been ripping up for a while. But I do think it's getting to the final phases for now, unless, and I'll speak about the second scenario, where we go up now to the 48 to the 49% level, and we should actually have a little bit of alt time, because the last times we got to these areas, we actually ended up having and resulting in a couple of weeks of altcoins, where we had this really strong catch up within altcoins. And right now we're getting to that major area again. So if we're going to work on scenario one, it means there's a little bit more in Bitcoin, which means we do go up another % or so within dominance. But that's basically giving us an indication of 30K Bitcoin. Right? From a 30K Bitcoin, maybe a quick shakeout, quick to 27, everything fine, and we activate the altcoins. Because let's be honest, the altcoins have not moved at all just yet. And then we actually got on a little bit of an altcoin ride. The altcoins ride for, a few weeks. We actually have a really strong push. Now, if I had to evaluate and look at the scenario of Bitcoin going to 30K, what does that mean for altcoins? For me, that gives me an understanding that we have an Ethereum that's between 2.5 and 2.8. We have a Solana that's sitting between $45 and $60. We have a Cardano sitting around about 60 to 80 cents. So it's still very big from where we are currently. So that's sort of where I'll relate when we have the altcoin catch up at some point. And if Bitcoin is 30K is the top for now of this current run, that's sort of where I see the altcoins moving to, right? But then we have the second scenario. And the second scenario says, screw these little levels that everyone's talking about. Let's go huge. Oh, we're about to start. I think it's going to go crazy. But what basically happens is we break this dominance. And if we break this dominance, guys, I just want to explain something to you. Dominance has been in this range for a while now, and it's basically been here since 2021. And if we break through this, you could be looking at a 55 to 60% dominance. Now, if this had to happen, it's a 40 to 50K Bitcoin for me. The only way I see all the money just filtering on Bitcoin like that is if it just does not stop. So that's how big this meeting is. This meeting is determined on how high this Bitcoin can actually go. If the markets decide to rip here, plus we have the big news tomorrow, like the airdrop tomorrow and all these things happening tomorrow is going to be a huge one. Like we're just sitting right now at such a crazy level. And, you can see I'm quite excited because I've been sitting and being like Bitcoin's in a 4-year cycle, and it's respected that for a while. Imagine we change that. Everyone's expecting a 2024, 2025 bull run. Imagine Bitcoin just runs to 50 now. I don't think it's an all-time high break yet. And that $1 million claim is quite crazy. But I do think there's so much hype right now within the markets. We are going to see something absolutely insane. Now, if that...
So Sheldon, I'm with you. I managed to get a bit of power.
Thank you, bro.
We're 1 minute away. So I don't know which chart you're going to watch. Maybe the Dow or something.
Let's zoom in. Let's zoom in. When do the numbers come out now? So let me know when the numbers are out, bro, please.
Yeah, you can look on the Dow maybe, or but you'll see that sudden violent wick.
Okay, so we got the two major charts here. Let's jump into futures. I like to zoom in. Let's have a look.
Zoom in.
Let's zoom in. Okay.
Like 5 minutes, 3 minutes, and then you'll see.
No, not yet. Okay, we'll go to 5 minutes. We'll be degens. Okay, we got that over there, and then over here. We got the 5 minutes. Sorry, Craig, there's a little bit of noise in your background. I'm just going to maybe check for me. Amazing. So let's get the charts ready, guys. Let's get everything. Is it going to happen? Are we going to have a Bitcoin explosion? Oh, it looks strong.
It's 25 basis points.
Oh.
25.
Oh. Okay, let's see.
But never take the first candle, eh?
No, you never take the first candle, but let's see. So what we want to see. So guys, I'm going to allow the craziness to happen just for a minute or two, and then we will start going through the charts and looking at this. Yeah, don't trust the first candle, guys. Never trust the first candle. Let's have a look. Let's get the next chart out here too, which would be the dominance. Let's have a look at dominance to see what dominance is doing. Ooh, if we can somehow have a Bitcoin rip and all of a sudden dominance to the downside. Let's get crypto bubbles in here too, so we can get a little bit of idea. Okay, 25 basis. So that's basically what everyone's been expecting. Obviously, it comes down to what Powell has to say on what comes next and what's the roadmap of where they plan on going next with this. But so far, market's reacting pretty good. Let's have a look. So what we want to see from the US, the US 30 guys, is we have this major trend line. And the last 2-3 weeks, we've been having this, sort of downwards market. If we can have the stock market break this, it's insane because I think we're going to go back to the higher levels of where it was, a basic recovery. Dixie, come on, Dixie. Ooh, if Dixie can lose these lows and make it down. So, guys, remember Dixie as well, another important chart. This broke that trend a while back. So let's quickly have a look over here. And it's basically indicating that the Dixie could possibly make a new lower low. So that would be a huge one too. So I'll keep track of the Dixie as it stands. Now, what I'm looking for next, guys, is I'm looking to see if we decide in the next 15, 20 minutes, as Powell's speaking, that we start to break these trends, I'm going to start jumping on some altcoins to see what's breaking trend. Because if things go good and the markets react good here, we're not going to have that pullback just yet. And I'm expecting liftoff. We don't know when that dominance is going to turn. All that I know is that dominance is sitting around 48%. And I know at some point it's going to be distributed. And it may even be on a pump. So we got to be ready. If the market reacts good here. Ooh, Let's have a look. Any short-term traders? No trades right now. Close. Wait for a little bit of direction, and then we trade it. For now, just watch what's happening. Oh, so Bitcoin ended up going to basically 28.9. Guys, what are we thinking? Put in the comments. What are we thinking? Well, he says take profits. Darth Maul candle. It is. Volatility is about to go crazy, guys. No trades right now. No trades just yet. Just hold on. There's a lot of time within the altcoins. We'll get something out of this. We'll definitely get something out of this.
So Sheldon, the fact that we've got 25 points, I mean, it is what the market expected. So everything is now going to be based on what Powell says at in 27 minutes time at 1/2 the hour.
We'll be streaming. Guys.
Yeah,
will you get me the link there, please, Greg?
Second.
Will you give me the link, please?
Yeah,
for the stream. Amazing. Yeah, we'll watch it and then we'll have a look at what's going on. For now, I just want to see how the market continues to react here. Stock market pretty good.
Sheldino,
bro. Okay,
Yo.
What's happening? Explain to us.
So I'm on the spaces. Let's quickly go through the highlights. So the highlights are as follows: 25 basis point rate hike, which is exactly what the market predicted. There is some bearish news that the market didn't predict, and that is that they are expecting the rates to not have any rate cuts this year. So that's what they're expecting. They're expecting no rate cuts this year, which is, I think the market was expecting 3 rate cuts. They are not expecting any rate cuts this year. Let me see what else there is. There is also the dot plot summary, 4.3% interest rate at the end of 24, which was 4.1, and 3.1% for end of 25. The longer term, the Fed is adamant that they want to stick to the 2% inflation target. So I think this is actually quite bearish. We're going to have to wait for Powell to talk. Bitcoin doesn't give a shit. And the reason why I think Bitcoin doesn't give a shit is because I love this tweet. I'll quickly share the tweet with you guys.
Look even at the futures.
Yeah. So I mean,
at the moment, not reacting too bad. We're not getting obviously.
Let me show you
depends what Powell says. Show me.
So I'll tell you why. This is why it is. Because if there's a high interest rate increase, he says, holy shit, the banking system will collapse because there's the banking collapse, which is kind of happening. And if there's a low interest rate increase, then it's holy shit, they're going to lower rates. So Bitcoin can't lose here because it's got the banking system protecting it. Because if the Fed raise interest rates, which I just did, then effectively it increases the chance of a banking collapse. And if there's a banking collapse, you want to be holding Bitcoin. So all this is unbelievable. I'm going to hop back onto my Twitter spaces. I am here. I'm going to keep
jump in whenever you can, bro. Look at the Dixie.
And we'll also listen to Powell speaking together.
Oh, Dixie. Okay, amazing, bro. Jump back on. Amazing. So Dixie is falling, guys. Have a look at Dixie at the moment. That's absolutely coming down hard. Wow. S&P market looks like it's reacting pretty good. So S&P at the moment, we'll see what Powell, if he's going to come ruin anything. But right now we have S&P breaking trend. Big one. Big one. Let's go have a look at Bitcoin. Come on, Bitcoin. Ooh.
Yeah, if you look at it on the small time frame, look at like
3-minute
candles, Sheldon. 3-minute candles, you'll see we've got one, the Darth Maul, and then 2, 3.
No, I'm not zooming in. It's too much zooming. No, wait. Let's have a look here. So Bitcoin obviously looking good at the moment. S&P looking pretty good. What's dominance doing? Oh, so this is obviously meaning, let's have a look at some altcoins. Okay, so what we want to see here, guys, is yes, we're waiting to see that we close out trends and markets looking hot. What the key thing, though, is to see what is ready to explode. Like what is taking off first? What is showing strength right now? And again, we have ALGO, we have XRP, we have 𝗍𝗵𝗿𝗆𝗍. Bubbles is amazing for that, guys. It's amazing when you're at a level like this. And we end up getting key breakouts. And if we can have this, let me paint the perfect scenario here. If we have Bitcoin rip up like this now, and it decides to start chasing those levels, and we do have this dominance make its way down. Now, I do think if it gets to 30K, it will continue up. But it does decide to come down. You're going to see a major push. Now, let me start looking at some charts for us. And what I'm starting to see over here is obviously render is a huge player that's always looking really good. So I'm going to chart up on some render. ALGO, definitely. We have XRP. We have Stellar. It's weird how Stellar and XRP always run together. And we have 𝗕𝗵𝗿𝗍𝗍. So in the meanwhile, while we stick and have a look over here, I'm going to start charting up and start looking at some of the altcoins to see if there's any trades here for us or some key breaks of levels, because you want to, guys. The altcoins haven't moved at all just yet, and if we can catch them early going from Bitcoin into alt phase, I believe that this is going to be oh, look at this. So Phantom looks ready to, oh, that was our longs we gave the other day. Great entries. Phantom looks heated. It looks like one that wants to break up really quickly. But let's quickly have a look. So XRP for me, guys. XRP is still a big one. I spoke about the long-term trend. And what I spoke about earlier as well is now you've got your retest. It may go slightly lower than this on any smaller pullback that may happen. But XRP, I still think, is an absolute gem right now, guys. I think it's amazing. I spoke about it earlier, how XRP is starting to look incredibly strong to Bitcoin. And that's the key right now. The key is you have a strong Bitcoin and you have dominance going up. And if you can find an altcoin that's stronger than Bitcoin right now and is showing stronger to the pair, you really have like a double whammy. And you have not only a strong Bitcoin, you have something that's stronger than Bitcoin. And you could see at the moment how we're starting to get these huge interest wicks and these huge interest candles that come within XRP. So XRP is still, for me, it's slightly cheaper than where it was yesterday. What's happening here, guys? What's happening? Back to Bitcoin. Oh, it looks confused. Market looks confused. Let's quickly jump onto S&P or to the futures. Come on, we want this close outside. Chaos, what's up, bro? So we've got Chaos over here. Yeah, who's up here? What's happening? I'll speak about them now, guys. Let's allow the craziness to continue.
Sheldon, every single one of the Fed members voted for 25 basis points, 0.25. So that's exactly what was expected. So it's complete alignment from their side, which is good. I'm trying to find the dot plot, and I'm waiting for a link for the actual speech. Sheldon, I'm not hearing you, bud. I don't know.
I'm also not hearing Sheldon, but I'm here.
Can you hear me?
Yeah.
Can you hear me, guys?
Should be better.
Craig,
I can hear you, brother.
Okay,
so what's happening, bro?
Let me give you guys a bit of an update. So where are we? When we went into the interest rate decision today, just to show you guys where we were and where we are now, when we went into the interest rate decision today, the market thought that we were going to get one rate hike today, one more rate hike in May, and then a decrease in June, nothing in July, a decrease in September, nothing in November. Hold on 1 second. What's wrong? Oh, sorry. I just cut my mic. Sorry, I had to cut my mic. Okay. So this is the plot. An increase, and then a decrease, and getting a rate of 4.25 to 5% by December. But the Fed has now told you that they're getting that they're going to stay at 5%, so no more rate cuts. So this is actually a lot more bearish, a lot more bearish than the market thought, which is why I'm quite surprised that if this is bearish, why the dollar is not going up and Bitcoin's not going down. Theoretically, based on this, Bitcoin should be going down, and the market should be going down, and the 𝗕𝗍𝗃 should be getting stronger, and the market's responding in the opposite way, which kind of says that the market's maybe not believing the Fed.
Crazy.
The market's not believing the Fed.
They don't trust them. Is that what we're trying to say? Yeah. No more trust.
Yeah, the market's not believing the Fed. I suspect the market will repair this overnight. I think the market will repair this overnight. I would say we get a slight pullback here when the market processes, but let's wait for Powell to speak. Well,
what could he say that could fix it, Because right
Well,
now
let's
it
hope-
looks very confused. The market looks Bitcoin looks confused itself.
But he could come out very, very hawkish on his talk now if he wants to hammer the point.
Everything happens in 18 minutes. We need 18 minutes.
18 minutes. Have you got the link, Ron?
I'll ask the guys to drop it in the research group.
Please, bro. Then we can get this up here.
Okay, here we go. We've got the link to the 𝗓𝗧.
least-
It's in the it's in the research group. Okay, I've got it.
Get that up. You got it.
I got it. We'll be back when it's live. I'll add you guys back. But I think for now, there's about 18 minutes to go. So you guys keep looking at your charts. I'm going back to my spaces.
Cool, bro. Multitasking. So Dixie is falling. It's falling really hard.
Sheldon, I've put the link in our group as well, so you can pick it up there.
Thank you, bro. Thank you. So we obviously have Dixie. Let's quickly have a look and see what the rest of the market is doing here. Whoa. Altcoins. What's happening? What's happening, altcoins? Yeah, it doesn't look. It looks incredibly confused right now, and it looks like we might reverse here. Let's have a look on the. Now, for me, guys, it's a good thing. If we do decide to pull back from 28 something, I do think it's a temporary short-term high for Bitcoin, but I think it activates the altcoins. I really do. I think this is the one that can get the dominance to turn, and here's probably the perfect look at that. So what happened with the dominance within the last few days is we ended up losing slight steam on this current momentum that we've been having. And look at that. We can finally start to get this dominance to move down, which means you can expect altcoins to start coming to life within after this next dip. If it happens, I'm not counting Bitcoin out though. And the only reason I would say that Bitcoin goes to 25 to 26, which would be a target if we have a proper pullback, would be we losing the 27.3 level. So I'll show you over here quickly on Bitcoin. If we have a look at this current trend, so I'll keep this trend up over here so that we can have a look and see, are we going to expect just a slightly bigger pullback? Now, for me, I'm not afraid of this pullback, and I don't want you to be afraid of it either. Basically, what it means is, okay, the pullback scenario is in play. Let's get ready to buy here. And that's beautiful because we're trying to see here, is this thing just going to rip? Is altcoins just going to go from here? Is it time to be in fully now? Or can we get slightly earlier, lower entries? Because let's not forget, the market's on a higher time frame. It's extremely bullish at the moment. So let's have a look. Still nothing crazy just yet. S&P. Oh, come on. We want to close outside this trend. We definitely want to close outside this trend. Guys, we're 50 minutes away and we'll be streaming the FOMC. We definitely will be streaming it. In the meanwhile, put the altcoins that you guys want me to have a look at. I was busy chatting about XRP, which for me is at a great level at the moment. We have Phantom looking strong. Oh, I spoke about Blur the other day and it's taken off. So Blur's done really well. Render, looking fired up. Looking ready. Let's actually have a look at Render here. Guys, all that I'm saying, and I want to remind you guys again, with many of these tokens, because I can definitely see L1s looking like they're ready to come back to life, is all I'm saying is at some point we're going to have this mega melt-up, and it may happen now. It may happen by tomorrow, by having this pullback and activating the alts. But where you currently have Bitcoin on many of the higher time frame charts is you have Bitcoin in this phase and in this area already. And it's a very typical area of Bitcoin goes first and then altcoins, like we have this reset of the market cycle, right? But if you have a look, Bitcoin's sitting in this area. And for me, many of these alts are going to catch up and get to this area over here. Now, I do think there's depression coming at the end of the year. I don't think it's all-time high break just yet or things like that. But I do think this wave can be huge. I think it can really be a big one. And I want to remind you guys again of what are the crazy bullish scenarios, because there is a really bullish scenario of Bitcoin because it's looking incredibly strong at the moment. And that scenario would be very simple. Let me just get
your signal's all wonky, Sheldon.
Is it my signal?
I think so. Just leave some comments in the group, or Paula, what you seeing?
Have a look. I don't see really much of it just yet. Is my signal fine, guys? Just tell me signal's fine. Signal's fine.
When you're talking slowly like this,
I think it's fine, Craig. We'll have a look. Signal fine. Signal fine. Everyone's saying it's fine. So what I want to remind you guys again of, how big could this possible move actually get? I want to remind you what happened, the last cycle, and it ended up being, just a second high, not the all-time high. And I want to remind you again, just quickly, that this last bear cycle was a total of around 400 days. And what's a bear cycle? A downward straight market. And we ended up going the same amount of time down over here. And the key difference that we just had over here was we had this little relief wave, the original high, and we had this little relief high. And ultimately, we've never gotten that since this push. And what tends to happen after that is a slight depression, and then we can start the new cycle. And this would obviously mean us respecting the 4-year cycle. But what it did do was it basically went from here to here. It went to 618. And if I show you the level, this for me is the crazy bullish scenario for Bitcoin. If we had to go into a crazy level, is a $47,000. 618, if it had to retain. So I want to keep that in the back of your mind that there is that crazy level. But as I was saying with the altcoins, many of them are to catch up this major level over here on them. And if you look at a little simple one of ALGO, and you look at Solana, and you look at AVAX, you're looking at 100, 200%. Those are the targets for me on a lot of these when we have an altcoin run, if Bitcoin remains at 30. If we go higher than 30, we end up at 35, 40, crazy levels like that. They're my old targets. They go absolutely crazy, and a lot higher from those levels. So what I'm trying to make sure that we do is we catch the altcoin run. And will it be a dip in between? We shall see. For now, Bitcoin looks crazy. It looks really good. S&P holding, 𝗕𝗍𝗃 tanking. Absolutely coming down hard, the 𝗕𝗍𝗃 right now. Look at the 10-year yield. Coming down. We're down another 2% on the 10-year yield for the day. We have 𝗕𝗍𝗃 absolutely falling hard. S&P looking like it really wants to close outside that trend. We have 10 minutes to see if it closes outside of that trend. Rand's bearish. I don't think it's built in Run to be bearish. I don't think there's any possible way that Run can be bearish. I think he's saying short term, but I think I do agree. It could, if he's saying it can be bearish for the year. Oh, Bitcoin, come on. But all of that means he'll just buy more if it goes lower. Run only buys. He never sells. He never sells. Guys, how are we feeling? What you
saying I'm bearish. I saw comments saying I'm bearish. I'm not bearish at all. I'm the bull of bulls. But yeah, we've got to wait for Powell because he can really change the direction of everything.
He can. He definitely can.
Yeah.
So in the meanwhile, I just want to get the link. Yeah.
I've sent it to you.
Yeah, 10 minutes. 10 minutes. And we can watch the stream. I think it all comes down to this, right? It comes down to what he says. I think it's going to be a big one. Okay, so let's have a look there. Okay. I got it up, and let's get rid of that over there. Just to confirm, let me make sure that you can hear. So if I click that there and I click there, cool. You should be able to hear. Sound check. Let me know. Let me put it on. It will be a very irritating noise. Just tell me yes, Chris. Just tell me if you can hear that, guys, so that I know that the sound's ready to go, ready to rock. Okay, we got sound. Amazing. Fantastic. Okay, let's get this in over here. Amazing. Oh, market's confused. It's waiting for Mr. Powell. It's waiting. Stock market's not reacting bad. Futures and the S&P. We're not getting crazy bad. We're getting a really bad 𝗕𝗍𝗃. Really bad 𝗕𝗍𝗃 at the moment. So what Run's trying to say, he's saying that they're not believing them. They don't trust the Fed. I don't think any of us trust the Fed at the moment. Render's looking hot.
The interesting thing to watch is like people analyze every word out of Powell's mouth and what he's saying in the way he says it and his body language, and you'll watch how it just changes as he goes.
Yeah, it's true.
Snipe Powell.
Snipe Powell. But let's see, I suppose, right? Let's see what they basically. Craig, what's your eyes on right now? You've been an absolute king with altcoins at the moment. What are you thinking? Is there any?
My eyes on personally, I'm on Link. Link. Definitely.
There's a lot going
Phantom,
on there,
and look, we've had to now have eyes on Phantom's still looking very strong. Eh?
Someone's laughing that Hex is the only red one.
And then
for the last hour, it's been the only green one.
Is Hex only real? Look, Hex has been the biggest.
It's done well.
Actually, everyone laughs, but as I said this morning when I had a look, the biggest performer this year has been Hex. Eh?
It has been, definitely has been.
Is Hex there? Wait.
Yeah.
There, you saw it there on the year.
No, it's done well. It's done very well. Just keeping eyes on Bitcoin here to see where we're at. So you can see, guys, like any dip offs here to early 20,000, 28,000 is not a worry for me. If we start closing a little bit below that, then I do think a 26K does become an option. But like I say, for me, it's a reversal of dominance if that happens, and it's an altcoin by the dip for me, because you look at dominance already, it is showing. It's had a retest, and it's definitely, if the markets pull back, it's finally starting to slow down slightly. But let's see. Bitcoin's it's been a machine lately. It hasn't been letting us down. So we're 6 minutes out. 6 minutes out. Let's have a Dixie. Still looking pretty bad. Not a crazy push out of the futures or the S&P at the moment. Okay, a few minutes out, 6 minutes out. Get your coffee, guys. Get your coffee, get the popcorn. Let's have a look. Let's see what Powell's going to do. The pressure on this man. Craig, are you here? Let's get Craig in here. Craig, the pressure on Powell. Imagine being him every day. And like when he has to do these things, it's crazy. I don't think it's insane.
Especially over the last 2 weeks. I mean, with the three banks collapsing and what's happening in Europe, not that that's pressure on him, but and then with 𝗵𝗍𝗍 coming out with his $1 million Bitcoin in 90 days bet, and he's been on a rampage in terms of doing press conferences, YouTube's, Twitter Spaces. I mean, he doesn't stop, and what he's trying to emphasize is not the fact about the $1 million Bitcoin, is that it's about the devaluation of the dollar, and that's why I showed you that chart this morning, when you look at the USDT versus Bitcoin. I mean, I think that's just such an enlightening chart. And obviously we're now starting to see a lot of rhetoric coming out of Biden and that yesterday, and out of Europe saying, Bitcoin is not an alternative, and yet, but the market is defying it. I mean, Bitcoin has performed incredibly well this year. So people are starting to take things into their own hands. And as the 𝗵𝗍𝗍 says, I mean, look, whether we get $1 million Bitcoin, I don't know. But we've got a bet on the line, and everyone's paying attention because of that bet. And that's the scary, and that's what he wanted. He wanted people to see what's going on the dollar. Maybe you can show that chart while we're waiting, Sheldon.
Yeah, say present, guys. Are you ready? Are you ready? Are you ready? Are you ready? Ready? And then tomorrow's obviously the airdrop, right? Craig, you're on mute. Arbitrum, man.
Yeah, tomorrow's the
airdrop. So for me, if Bitcoin can hold 27-28 and we have that tomorrow, like, I still think we're on, right? I still think it's for me, it's like there's no doubt about it that the market's bullish, definitely. It's just about how bullish is it? Like, how big does Bitcoin go from here? If it goes to 30, like I said, I still expect a 100% catch-up from altcoins. But if it goes to 40 or goes to 50 or anything crazy, it's crazy. The last two cycles, we did have a retrace of that 618. And the 618 is $47,000 for Bitcoin, which would be absolutely insane. Right now, it's being slightly affected, but not at all. You can see this. It's It's looking incredible at the moment.
So the Arbitrum airdrop is in 18 hours time, so you can work that out relative to your time. So that's about 18
Dixie
hours.
tanking.
So it's about. So Sheldon, but that brings roughly $1 billion worth of liquidity into the crypto market. Depending on what people do with it, are they going to sell it? Are they going to, whatever? But
well,
$1 billion.
If Bitcoin's pumping, what would they do, right? You know what I mean? If Bitcoin's pumping, what they're going to do? For me, they FOMO within Bitcoin, which for me, maybe they go altcoins. Obviously, if altcoins wake up at that time, but for me, it's Bitcoin. The money goes to Bitcoin, and that can just be.
That chart is so scary.
Look at the Dixie. That's crazy.
But the 10-year yield, what's happening there? I mean, it's also going down. So
it is going down, not as aggressively, but it is going down.
Somewhere.
Money is going somewhere. Is gold on that?
So look at gold, Sheldon, and I assume silver.
Gold, yeah, a little bit of a push. Not even 1%. We have oil up for the day. Silver a little bit. Okay, so silver is breaking the highs. So money is flowing slightly, possibly into silver and gold, but not crazy amounts at the moment as it stands. But we do have Dixie looking crazy.
So people are really putting their money into commodity type things. I mean, oil surprises me, but gold, silver, and naturally it's going to come to Bitcoin. But I'm not saying alts, I'm saying Bitcoin.
I got a feeling, bro, like it could get, it's exciting. We fought such a hard year last year, and it's so nice to see Big Daddy so strong.
I see a comment on the side there. Yeah, I'm just going to put this comment up. How do we see it? This guy's saying Arbitrum will be dumped into resale. Doesn't matter what people do. If they dump it, the liquidity is coming into the market. It's got to go somewhere.
So but for me, it's like, when does retail... But for me, when does retail come in? For me, retail doesn't come in on Bitcoin. Like, I really don't see it. Like, a small percentage, yes. Retail come in altcoins. Like, there's no doubt about it. It comes in NFTs. It comes in AI, all these sort of effects. So for me, it's like altcoin run first. Then I believe they can dump on retail. But for me, retail's not here. I think there's a bunch of people, yes, getting into Bitcoin and wondering about the Bitcoin pump. But the altcoins haven't moved. When the altcoins pump and they rub, then we start to get real retail. Right now, I don't think retail's in at all. And I saw the fear and greed's only like something like 60 or 70. It's not at crazy levels just yet.
Okay, he's at the stage now, Sheldon. You're a little bit behind. Push your thing forward to the end, Sheldon, because he's talking already. Push the red.
It is at the end.
He's definitely talking on my other screen.
Different link?
Maybe just refresh. No, same link.
It's fine, we got it.
Okay.
Good afternoon. Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like
I'll
food,
update on the
housing,
charts
and
in a
transportation.
second, guys. Let's just see.
We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 1/4 percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment.
So holding
In our
trend for
SEP,
now, guys.
Each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Okay, guys. So for now, we do have Bitcoin still in
Colby Smith
trend.
with the
Obviously,
Financial Times.
pullback.
How confident is the
Let's have a
committee
look.
that the recent stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected. And really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we need to raise rates over the course of the year, more than we'd expected at the time of the SCP in December, the time of the December meeting.
Dominance coming down.
We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes, maybe some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
Mr. Chairman, can you explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time. And in principle, if that means that monetary policy may have less work to do. We simply don't know. So,
do you have concerns that the hike you did today could further exacerbate the problem in the banks?
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular, our lending facilities, the discount window, and also the new facility.
Nick Timmeros of the Wall Street Journal. Chair Powell, in your testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and the people who write the minutes will be very carefully counting. But I'll tell you what I heard. What I heard was significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that did turn out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. I think there may also just have been, remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's people, it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And in a way, the data in the first 5 weeks of the intermeeting period pointed to stronger inflation and stronger labor market. So that pointed to higher rates. And then this latter part, kind of the possibility of credit conditions tightening really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion?
So far, Bitcoin's looking okay.
Banks?
We know that we have other tools in effect, but no, we think our monetary policy tool works, and we think many banks, our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
Hi, Victoria Guida with Politico. I wanted to ask, you, along with the FDIC and the Treasury, the Fed board decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a concern that there would be some sort of economic contagion or financial contagion from the failure of these banks?
The issue was really not about those specific banks, but about the risk of a contagion to to other banks and to the financial markets more broadly. That was the issue.
Okay, and then can you also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation?
So Vice Chair Barr is of course leading that review, and he's responsible for it in his capacity as Vice Chair for Supervision. I realized, right away that
Come on,
that there was gonna be a
Bitcoin,
need
you're
for a
looking
review.
strong.
I mean, the question we were all asking ourselves over that first weekend was,
Ooh.
how did this happen? And what we did was early Monday morning, we sat down and said, let's do this. And he was obviously going to lead it in his capacity. So I don't, my role was to announce it, and I get briefed on it, but I'm not involved in the work of it.
Hi, Chair Powell, Howard Schneider from Reuters. So I want to go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes. I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a feature, not a bug. But yeah, absolutely absolutely the same. The story is intact. So it's really 3 parts, right? Goods inflation has been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing services is really a matter of time passing. We continue to see the new leases being signed at much lower levels of inflation. So that's 44% of the core PCE index, where you've got a story that's ongoing. Where we didn't have in February, and we still don't have now, is a sign of progress in the non-housing services sector. And that is, that's just something that will have to come through softening demand and perhaps some softening in labor market conditions. We don't see that yet. And that's of course, 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue, and we don't really see it yet. It's so people are making estimates. People are publishing estimates, and it's very kind of rule of thumb guesswork almost at this point. But we think it's potentially quite real, and that argues for being alert as we go forward, as we think about further rate hikes. For us, we'll be paying attention to the actual and expected effects from that.
Gina. Hi, Chair Powell. Gina Smilik from the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit. I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank, and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to the questions around supervision. So at a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, in a very, very fast run, faster than the historical record would suggest. So for us, for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here. How did this happen is the question. What went wrong? try to find that. We will find that, and then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage to offer my views on what the answers might be. I simply can't do that. Vice Chair Barr is leading this, and I think he's testifying next week. So, but that will be up to him. So that's really where it is. The review is going to be thorough and transparent. It is clear to your last question. It's clear that we do need to strengthen supervision and regulation. And I assume that there will be recommendations coming out of the report, and I plan on supporting them and supporting their implementation.
And the final point, can we feel confident that these weaknesses don't exist elsewhere, given that they got missed at this bank?
These are not weaknesses that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of uninsured deposits and in terms of its holdings of duration risk. And again, supervisors did get in there, and they were, as you know, obviously, they were on this issue, but nonetheless, this still happened. And so that's really the nature of the review, is to discover that.
𝗵𝗵𝗃 from Bloomberg Radio and Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally wrong from the Fed, or is there something different about the way you're looking at it, given that you're now thinking that moves might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here, are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people think about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking for purposes of our monetary policy tool, we're looking at what's happening among the banks and asking, is there going to be some tightening in credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from
you
rate
can see
hikes.
how the market's reacting from that last
from tighter credit conditions. So that we're looking at, and it's highly uncertain how long the situation will be sustained or how significant any of those effects would be. So we're just going to have to watch. In the meantime, and obviously at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
Go to Rachel Siegel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy, but there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are focused in commercial real estate?
So, we're well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong, it is sound, it is resilient, it's well capitalized, and I really don't see that as at all analogous to this.
One other question: would you be open to an independent investigation separate from the Fed's probe?
I welcome. It's 100% certainty that there will be independent investigations and outside investigations and all that. So we welcome when a bank fails. There are investigations, and of course, we welcome that.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky. So do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as it comes to our front door, stick it in our model along with a million other things, and we have responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we will get inflation down to 2% in time.
And if I can follow on that, but they're working, the spending that's happened is working against what you are doing, right? So it's prolonging inflation.
Mm-hmm.
You know, if you have to look at the impulse from spending, because spending was, of course, tremendously high during the pandemic, and then as the pandemic programs rolled off, spending actually came down. So the sort of fiscal impulse is actually not what's driving inflation right now. It was at the beginning, perhaps part of what was driving inflation, but that's not really the story now.
Let's go to Neil Irwin.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's been around a long time? And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's $143 billion on your balance sheet
Markets
last
are
week
acting the best
supporting
right
that
now.
deposit guarantee?
Dominance coming down.
Sure. So
I do like that.
13.3 seemed like the right. We have a little more flexibility under Section 13.3. We've done quite a lot under the discount window as well. We needed to do a special facility that was designed a certain way, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to meet certain requirements, but it seemed to be the right place. So with the FDIC, we're lending to the, in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Chris Rugaber.
Thank you, Chris Rugaber at Associated Press. The SEP suggests one more rate hike, as does the change in the language in the statement, in which suggests that you're perhaps nearing the end of a cycle of rate hikes. Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end? Thank you.
Absolutely not. No, if we need to raise rates higher, we will. I think for now, though, we
stop it, Powell.
As I've mentioned, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is. And we'll also be watching it what's happening with inflation and in the labor market. So we'll be watching all those things, and of course we will eventually get to tight enough policy to bring inflation down to 2%. We'll find ourselves at that place.
So sticking to his guns through all of this.
Hi, Chair Powell.
This is only about
question. Kyle Campbell with American Banker. I have a couple questions about the balance sheet.
Ridiculous.
First of all, I'm curious at what point the financial supports that the Fed is extending through the discount window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
So people think of QE and QT in different ways. So let me be clear about how I'm thinking about these recent developments. So the recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer term securities. Large scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening.
Guys, if this pullback does happen
working.
and we do lose
in terms of the distribution of reserves,
I still think this is really good for Bitcoin.
We don't
I
see
think immediate effect, we're going to get a bit of red, yes.
Running into reserve shortages. We think that our our program of allowing our balance sheet to run off predictably and passively is working. And of course, we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
Hi, Chair. 𝗕𝗆𝗧 with Bloomberg News. The minutes of the January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed, do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't recall the specifics of that. It's quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as it is now on the public record, the supervisory team was apparently very much engaged with the bank repeatedly and was escalating, but nonetheless, what happened. And so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of I'll come back to that, the speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
I will have to come back to you on that. Yeah, I don't know.
Simon 𝗿𝗏𝗏 with The Economist. Thank you very much. Chair Powell, you've stated twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors?
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools.
Guys, I'll be updating many charts
should
after
assume
this.
that their deposits are safe.
10K. Someone say 10K.
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could give us a little bit more color. You gave just a little bit of color. You said during the first week of the Silicon Valley weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well. And I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
Nicole.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
Guys, for me, this is a
So that's
temporary
an
cost.
estimate
It's not
of what will happen
this is
as
immediate
demand
reaction dump
slows
right now, not
and as conditions soften in the labor market.
How can they
And
not
it's
change something?
It's a highly
Continue.
uncertain estimate, and I mean, there's really we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, as I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
But I guess the question is, historically, it's hard to.
Just the mic, please.
Yes, sir.
Historically, it's been hard to contain unemployment, and the question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your thoughts?
Well, it depends on whether so recessions tend to be nonlinear, and so they're very hard to model. The models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's so we don't know whether that'll happen this time. We don't know. If so, we don't know how significant it will be. And so, we're very focused on getting inflation down, and because we know in the longer run that is the thing that will most benefit the people we serve. That's how we can have a long, we've had very strong labor markets through these long expansions that we've had. 4 of the 5 longest, or 3 of the 4 longest expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or an expansion. You can have very, very long expansions without high inflation. And we had several of those, and they're very good for people. You see late in an expansion, you see low unemployment, you see the benefits of wages going to people at the lower end of the wage spectrum. It's just a place that we should try to get back to.
Jean. Hi, Chair Powell. Jean Young with Market News. I just wanted to ask, with all the events of the past 2 weeks, do you still see a possibility of a soft landing for the U.S. economy?
It's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been changes in that. The question will be how long this period is sustained. The longer it's sustained, then the greater will be the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and we're certainly trying to find it.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious regulatory, particularly immediate attention. That's and I guess there were 6 of them. So
and getting to the seriousness of it, how are you going to ensure that banks comply with these citations, take them seriously? How will you enforce them?
That is a great question, and is right in the heart of what the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. What can we do to make sure? But again, that's not for me to answer today.
So you have specific thoughts on that?
Well, I see. If I did, I wouldn't share them, because I really, this review is going
on, bro.
And I want nothing other than us to find out what happened and why, figure out what we can do to do better, and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts. It just isn't appropriate. There's a real serious review going on with people from all over the Federal Reserve System who are not connected to this, to this work, not connected to this bank. and under again Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
Okay, we'll go to Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Curious, how do you view financial conditions right now? If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures prompted any discussion around changing the implementation of the balance sheet runoff? Thank you.
So we haven't really talked about changing the balance sheet implementation. That's not something we've discussed yet. As I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a...
Curious how you view financial conditions now, and if credit were
okay.
to tighten enough, if that would prompt a rate cut.
So financial conditions seem to have tightened, and probably by more than the traditional indexes
Two major supports, guys.
Say, because the traditional indexes are focused a lot on rates and equities.
This is immediate,
and they don't necessarily capture
fear,
lending conditions. So we think that though. So there are other measures which if they're focused on, bank lending conditions and things like that, they show some more tightening. The question for us though is, how significant will that be, and how, what will be the extent of it, and what will be the duration of it? And then, once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. And so, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case.
Okay, stop talking, Powell. Finish now, bro.
That's all I have to say.
Call it.
So, thank you very much.
Well, thank you for that, Powell. We appreciate it dearly. We appreciate having this fantastic bullish start to the day, and you just come and send a few red candles and then you leave. So thank you, sir. We appreciate it. We appreciate your service. So guys, I don't know about you, I'm about to jump into some charts for you guys. For me, it kind of seems like job up for the line there. You have to say this. Very stick to their ways of no interest cuts, nothing like that. Which for me is just ridiculous, in my opinion. Like, they're gonna allow all of this to happen. Like, it's just, for me, this is incredibly bullish for Bitcoin. Like, if we've ever wanted a time for Bitcoin to be what it's meant to be, it kind of feels that them sticking to their guns and continuing, what their goal was, even though we've just had all of this just happen. It's just ridiculous. For me, this is extremely bullish for Bitcoin, and I'm speaking about now. We're gonna speak about charts and see where the level's at. I don't know how you felt, Craig, but he felt nervous. He felt like,
yeah, he was very nervous, and he deflected that one question completely, which intrigued me about where they asked him about whether the other banks are properly safe. I think that was actually, unless someone remembers what it was, but he really sidelined the question. But your bubbles, you've got to refresh your bubbles, Brew. You went on to bubbles, but you hadn't refreshed it on the 1 hour.
Yeah, we'll refresh it. But yeah, so let's jump in. Let's have a look, guys. Let's speak about what has happened. Let's speak about what the charts are saying.
On the 15 minutes, Sheldon, it looks like it's already, I know it's a small time frame, but that drop seems to have stopped so far in the 15 minutes, and a little bit of a wick to the bottom. So
yeah,
it's like we might go back to where we were.
Okay, well, let's speak. So for me, it's like bearish. Yes, I think it wasn't great. As you're saying, he sounded extremely nervous. Kind of sounds like they have no idea what's going on. They're just trying to stick to their guns and stick to the plan, which I think is the wrong decision. I think Bitcoin does turn out stronger than this, but now let's be honest, we are starting a pullback. So let's speak about the pullback. Let's speak about what the levels are and what I'm basically looking for. Remember, I am doing a show again tomorrow, so we'll have an update, 12 hours from now to see where we're at that time. We got to remember, 20K Bitcoin went up to 28K, and now we are starting this little cute pullback at the moment, but we never know. May this start to extend and really start a serious pullback. So what has definitely happened is it did create us to lose the short-term trend. Now, for me, I take everything with Bitcoin with a pinch of salt for now, but I do have more levels, right? And I'll explain this to you now. But what I mean by that is Bitcoin's just currently doing exactly what the stock market's doing. So this Dixie drop, I don't think was nothing. But if you have a look at the US30, as this tanked and as it did this, Bitcoin just followed. Now, for me, it's not a direct attack or anything bad happening within crypto. I still think with the airdrop happening tomorrow, I still think I'm taking this dump with a pinch of salt. I really am. And I think that it can obviously, remove or get back above this current dump. One thing that I did see that was really nice was I did see the dominance turn. That's fantastic. It's great to see that we needed something to start to get that dominance to turn. And we saw it immediately over there. But let's quickly speak about Bitcoin. So it did have a support trend at the 27.8, and we've currently lost that. Now it does have these horizontals. And the time that I start worrying, so what happened previously was Bitcoin was trying to get past 25K for a while, right? And ultimately that now becomes support. Very simple. Areas of where we would really like to get some buys on Bitcoin as it has really extended really quickly. Now, in order for me to get through that level, the 27K area and the 26K 300, it's basically these previous supports over here. We lose those levels, it indicates that possible pullback. But as it stands right now, guys, we've only but lost a 1 hour trend. 1 hour trend. We have not lost a 4 hour trend. We have not lost an 8 hour trend. We've not lost a 12-hour trend. I'm talking about very small time frames. But as you can see here on the daily, we do have the support over here that we can test at any point. So what I would definitely do is have some cash on the side in case that does basically happen. But for now, what we do have is we have the small support trend, and we do have major support areas in the levels of 27,000 and 26,300. So for me, until we are through those levels, I'm still taking this dump with a pinch of salt for now. For now, as it speaks, we lose these horizontals. Yes, 25K, but because they held 25,000 for so long to the upside, I believe it's going to be that same wall to the downside. I think people in Bitcoin have a point to prove right now. They're saying, screw you, banks. Screw you and what you're basically doing. Bitcoin is here to stay and it's here to do what it's meant to do. And I just feel it in me. And I don't know about you guys, how you're basically feeling. I'm feeling Bitcoin is just incredibly strong right now. And I think they're going to protect it. I really, really do, in my opinion. But let's quickly have a look at dominance. So this was something that was exciting for me to see. Yes, it's happening on a dump, but we may finally lose enough steam on the dominance. You could see how quickly, as soon as we started to pull back on Bitcoin, how quickly love went to altcoins. Okay, now altcoins still pull back with Bitcoin as it happens. But what we really want to do is we really want to start getting these lower lows and start getting this on a downtrend. And this will be perfect when the next bounce comes, maybe 27K, 26,200, or the $25,000 level. And this has reversed the downside. We're going to see an absolute incredible bounce within altcoins. Now, the only way I don't see this continuing is if Bitcoin bounces on one of those supports and this decides to bounce with it, dominance decides to go up. For me, Bitcoin's not finished. So the only way that I would see, it means that 28K 800 for me is not the high for Bitcoin. Because if this bounces with Bitcoin now and dominance decides to go again and break these highs, for me, love's still with Bitcoin and we're going to way higher levels. Now, guys, I'm going to explain to you again quickly. I'm focusing on Cardano buy on this dip. I'm focused on a Phantom buy on this dip. I'm focused on an XRP buy on this dip. And I'm focused on a Chainlink buy on this dip. These are the four that for me have broken to Bitcoin and are showing incredible strength at the moment. The rest, what I want to see is I want you to load your RSIs. So you load your stochastic RSI and you'll start to see that the higher time frame, 8 hour, let's jump to Bitcoin. You can see that the 4 hour, the 8 hour and the 12 hour are on their way down. We hold anywhere between 26 and 27,000 and these RSIs all hit the floor. I'm getting, and this is the way I'm trading it, I'm getting 3 gaming tokens, I'm getting 3 AI tokens, I'm getting 3 layer ones, Bitcoin, ETH, I'm loading up. I'm loading up on this, guys. I'm loading up on that. It's just about the question of, do we go to 25? That's the big one. But for me, these horizontals, if you see those 3 RSIs hit the floor and we hold those levels, I'm in. I'm not bearish on this. I think that I think it's crap. I think it's a bunch of crap, to be honest. This is my honest opinion. But I think this is only but strong for Bitcoin. They're changing nothing. They're doing the exact same thing and they're continuing it. We're having banks collapse. We're having many different things happening, and they're sticking to their guns. These macho men, and they're tough. I think it's going to shoot them in the foot. I am currently still extremely bullish on Bitcoin as it stands. It has held this really good. And to be honest, I wouldn't be surprised if this is green by morning. I'm focusing on buying on altcoins on this thing. And like I said, I've given you the top 4 now. And I do think Ethereum, we have the upgrade coming for Ethereum. And I think Ethereum is going to be one of the best ones to be getting on this dip too. $27,000, $26,000 to $200 and $25,000. Whenever those levels are being reached, I'm loading up on my altcoins. I'm saving some cash for the 25K, but I am busy on this. This is my opinion on it. I don't think this is the temporary top just yet, but we'll see by tomorrow. Guys, smash the like button. Thank you for spending the evening with me. Have a fantastic evening, and I'll see you all on tomorrow's show. Much love to you all, and be safe out there. No leverage trading. No leverage trading. Not right now. Let the market do what it needs to do. Much love, Banter fam.